Oh, it's a very good question because 2017 thus far has been a great bullish year. I don't think us included thought it'd be as good as what it was or has turned out to be. And as you turn your attention towards 2018, I think it's a very interesting setup here. You've got no interest rate hikes apart from the Fed probably in December. You've got the best PMIs, which are an indicator of global growth, are running at their highest number in 14 years. So as we come into 2018, you've got no more hikes and great growth. Earnings are looking really good as well. So I think we're on the cusp of actually a rip snorting 3 to 6 months. The interesting thing about bull markets is they start off with disbelief. Then they go through acceptance. It's like psychology of it. And then the last bit goes from optimism to euphoria. And there's no denying we're probably in optimism, but are we in euphoria yet? I'd say no. So keep in mind, in 2006, emerging markets went up by about 28%. Everyone thought that was a great outcome. They did almost 40% in 2007. So EM this year is up about 30%. If we are to go into this euphoric blow-off, you could see sort of 30% returns in 6 months. I know that sounds almost ridiculous, but that's what bull markets do at the very end. So one of the interesting things about these PMI surveys is for the first part of this recovery from say 2010 through to 13, it was the US was recovering, but everyone else was sort of having a ho-hum patch. Europe in particular had a double-dip recession. What you're seeing now, and I include Australia in this as well, is that unemployment in Australia is actually falling quite rapidly now. So Australia is creating more jobs on a per capita basis than what the USA is. So we're not yet at the point where we've got a tight labour market, but I'd say Australian economy is running okay. You're not really seeing an expenditure because people are a little bit concerned about their wages. But I think it's everywhere. PMIs, as I said, which are a measure of people's confidence, and they do translate into GDP generally pretty well, are running at global highs for the last 14 years. So I do think you'll see it everywhere across the board. So that's Japan, that's Europe, that's Australia, and that's the US. I think 2018 is going to be when rates start to go up. So central banks will be seeing the data that we're seeing now, and then slowly over the course of late 2017 through predominantly to middle of 2018, they'll start hiking rates, which means late 2018 is going to be more of a bumpy ride, let's say. That would be my first guess. But for the moment, low vol, well, the best indicator of volatility is yesterday's volatility. So volatility has this process where yesterday tends to tell you what tomorrow is going to do. So yesterday, or as in i.e. recently, is very low vol. So your best indicator is low vol will continue. Now, on the other side though, is once vol starts to rise, you should be concerned because yesterday tells you what tomorrow is going to be. i.e. rising vol says that vol's probably going to be higher, and that higher vol says that vol's going to be higher again. So for the moment, we're not seeing that. So simplistic as it sounds, I'm relatively sanguine on the low vol environment. Rates, more of 2018 problem.